Hi, welcome to this video day. We're on the 12th of April, we're on Sunday. We're just going to give our updated outlook and forecast for the Euro today. We'll look at the Euro against the USD, the JPY and the GBP. We're also going to look briefly at two Euro correlated currencies as well, the CZK, Czech krona, and PLN, Polish zloty against the USD. We're going to go over to the charts in just a moment. Now, in recent videos, we've been saying for us, Euro limited upside, but it's very vulnerable to a big downside break, and that downside break could be getting closer due to the ongoing dispute between EU members in terms of how to respond to the coronavirus. Now, they either reach agreement pretty soon or it's going to be disaster for the EU and disaster for the Euro. Now, I'm just going to discuss all of this in more detail, obviously, as we go to the charts, but just before we do so, please do keep in mind, it is my view as of right now. It can of course change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video, get live access to our member centre. You can also follow our Facebook page and join our Facebook group. Now, the pair we're going to look at first of all is Euro USD. Now, before I draw my levels of entry, stop and target, I just want to show you smart money positioning in Euro USD. So let's go and take a look at the COT net traders positions first. We're on the chart of Euro USD, and this chart is just to look at the COT net traders positions, which is our favorite smart money trading tool. If you're new to our videos, you can look up an in-depth video on how to use this indicator. Our video is called COT Net Traders Indicator. But in brief, how we use it, you've got two groups. You can see my cursor here. The red line at the bottom is the commercials. They are smart money, okay? Then you've got the green line, which are large speculators. Now, what we're interested in is when the two groups heavily oppose each other and build up their respective positions rapidly. Now, on the right of the chart over here, you see the euro falls quite heavily. The commercials are coming in to buy it, and into that bottom they go heavily net long. Specs go heavily net short against them, and it breaks in favour of the commercials, rallying 600 pips. Now look at what happens when we rally up above the 114 level. The commercials drop out all their longs and then rapidly build up shorts as the speculators who got short in the rally suddenly come in long and get hurt in that fall there, which is well over 600 pips. You do rally back a bit, but then fall, a little bit of a rally. Two groups heavily opposed, both groups going against each other. Commercials is a really big short position for them, one of the biggest in years, and it's one of the biggest speculative long positions. And that for us points to the euro going down. Now, why are the commercials so bearish of the euro? We'll discuss the fundamentals and sentiment now and draw our key technical levels. So let's switch over to another chart. Right, Euro USD daily chart. Now, in terms of the technicals, I'll do them in a moment. We're going to keep our technicals very, very simple. We're going to have a directional bias from the fundamentals and sentiment, and we are very bearish. I just want to go through the reasons why very quickly. I have done full articles in the Facebook group and info on my Facebook page as well on why Eurozone now is in such deep trouble and why the euro could melt heavily to the downside. It could go a long way. I'll go through my target in a moment as well. Now, in terms of fundamentals and sentiment, let's take point number one. Obviously, the coronavirus, we know its impact on all major countries worldwide. They will face recession, could face a global depression. What's the problem for the EU? Well, the obvious problem is it's not a united country, is it? It's not like the United States of America. It's a political, not monetary union. That is the problem. The reason it's a problem is due to uneven wealth. We know, obviously, in Eurozone, there's rich countries and there's poor countries. And the rich countries, let's say the north, Germany, Netherlands, Austria, relatively wealthy. Southern nations, Italy, Spain, Greece, pretty poor. Okay, now this is a real problem. Yeah, you've got countries such as Spain and in particular Italy near bankruptcy. They're going to run out of money soon. Okay, now the poor nations, yeah, what they want to do is to issue bonds backed up by the richer nations. So the richer nations basically kind of guaranteeing the debt. Now that makes kind of common sense, okay? But because it's not a monetary union, it's a political union, yeah, the rich nations do not want to contribute to the poorer nations. And the rich nations make the point, they're opposed, but the EU law prevents debt pooling anyway. That's in the Maastricht Treaty when the EU was formed in 1992. So unless all nations agree to change that, the poorer nations are not going to get money. Okay, now you see it in the news. Netherlands is the country that is probably the most aggressive in terms of their opposition to the bonds or coronavirus bonds. You've seen the Italian Prime Minister attack them. Portuguese Prime Minister just recently said the Netherlands should be thrown out of the zone and not allowed to vote. He can't say that. Yeah, got to keep in mind the EU constitution, the Dutch, in their view, are doing nothing wrong. Yeah, Maastricht Treaty is there for all to see. But you can obviously understand the frustration of poor nations like Portugal and Italy. Now, the EU has approved 500 billion in aid for the poor nations. Okay, it's not enough. That's for all the poor nations. Okay, it's not enough for Italy. Italy is probably seen various estimates. Most are around 1.5 trillion this year alone. That's for Italy to stay afloat. Okay, it's not enough money. Italy really is a problem. It always has had huge debts. They're 120% of GDP. It hasn't got enough funds, basically, to bail out the banking sector if it has big problems, and it does. Doesn't have enough money to do everything it needs to do in the country, support the people. And you've got a real problem now in the south of Italy. Obviously, south of Italy, poor. A lot of people working in what's called the grey economy, away from government support. And, lockdown there, real problems. You're already getting social disorder with supermarkets looted, etc. You've got kind of, Italy, a huge amount of corruption in Italy at all levels of society. And that's quite important, actually. I'm going to come back to why it's important in a moment. But you could get a little bit of a power vacuum in the south. Now, here's an interesting fact. Obviously, I'm sure most people watching this video know that the mafia have a huge influence in the south of Italy. They do. They have a huge influence throughout Italy. Okay, just take one crime family here. I can never say it, the Grangheta. Okay, biggest Italian crime family. How much money do they actually make? They make more profits than Deutsche Bank and McDonald's from various surveys. And they're only one crime family, and they're kind of stepping into the power vacuum in the south and feeding people. They're not doing it out of the goodness of their heart. They will want a favour on the other side. The rule of law in Italy in the south could actually break down. You could see big social disorder. A lot of people haven't got enough to eat. This is in a major economy. Okay, Italy is the third largest economy in Eurozone. It's the world's number 8. And Italy, if you do get social disorder in the south, and it's just one of those things. It's really, really impacts on trader sentiment. And I think, well, it is already impacting on trader sentiment. The fact that Italy is in big trouble. I think most people are worried about it. Enough problems at the moment in the world without Italy going bankrupt and social disorder. It's very worrying. Okay, now let's hope that the EU nations can all get together and go and help Italy, because it'll help, well, the world. I mean, it's just not something anyone wants. I just don't see the problem being solved. I think it'll be one of those cases with the EU where, let's say, Italy does go bankrupt or whatever, then they can rush in to help, but it'll be like shutting the gate after the horse is bolted, as the old saying goes. Now, in terms of on the other side, you got the USD, and a lot of people say, well, USD is pretty bearish now because there's unlimited QE from the Fed. That means more dollars in circulation, devaluing their currency, so it has got limited upside. There's still a big shortage of dollars in the world, despite what the Fed is doing. And if you get a really big move to risk off, the dollar will go up. A lot of people say, well, EU, they've muddled through and got through problems before. They have. This one, though, is so big. So, yeah, I see it's pretty serious. Well, not pretty serious, very serious. Now, in terms of the chart, I haven't done the monthly chart in this week's video. Downside targets 104.50, which is monthly support, then down to 90 possibly. Euro, we start gaining traction to the downside. Yeah, it's going to go a long way. And I think even if Italy doesn't go bankrupt, the problems and divisions are in the EU are so big that another problem will flare up. I mentioned, I think, in a recent video about Hungary just declaring a kind of dictatorship in total contravention of EU laws, and the EU doing nothing about it. Anyway, moment we'll focus on Italy, but there's problems everywhere. Spain as well, which I haven't even discussed. Yeah, I think the euro's going down. Now, in terms of euro, you saw the commercials, they bought heavily here. I've got my cursor. Push the euro up really strongly above the 114 level. They immediately reverse to a short position. The euro tumbles down. It'll come up a bit, but the commercials are still selling. Come down a bit, a little bit of a rally. Commercials heavily short, specs heavily long. Now, in terms of having a bearish perspective on the euro, where would be good levels to sell at? Just draw a quick trajectory. I personally think on weakness through that double trend line there. What we look at, just for new viewers, we're always looking at this 20-day moving average, so the green line. Yeah, if we're bullish, we're looking for it to give way and power, and for prices power to the upside. If we're bearish, we're looking for it to give way on the downside. If we come back to it and we're bearish, we're expecting it to provide resistance or prices to top out not too far away from it. So if it goes through the 20-day moving average, we're often just sell back through it. Okay, above the 20-day moving average, sell back through it, see if she runs. New chart lows, then on to those the monthly support level I mentioned a moment ago, then on further to the downside possibly. If we break through this level, which is 108.50, where would you put your stop? I'd put it behind, which is a monthly level. That level there, 110. Our stop at the moment is at 110.80. We've already got a short position in as per the member centre. Now, in terms of the risk to reward on this one, it's fantastic in my view. If what we think happens comes to fruition, what about if we break above 110? We don't retrace. Well, if we break above 110, I just simply sell back through 110. Okay, go through the round number. Then I'll put my stop back at 111.80. If we got above 111, I do not see us going through 112. Okay. If you got through 111, you sell back through that level with a stop behind 112. Not going to do anything complicated here. It's not really necessary in my view. Now, I said that probably be proved wrong. 112 is a big level. So yeah, she goes through 110, back through the level, through 111, sell back through the round number, then go at least well back from the next round number. We don't break higher, just sell a break of the double trend line. So yeah, Euro USD, pretty bearish. I'm very bearish, obviously. Let's look at Euro JPY. Right, Euro JPY, just using the chart from our member center. We noted it in previous videos on the Euro. Very erratic, kind of messy price action this period here. But we've noted in previous videos, we did snap there through the 121 level. Then we had real difficulty in getting back through it. Okay, so here we get above it, just close above it there, down, back to test, can't get through, back to test, can't get through, come roaring up, can't get through, down. Now we're coming back up again. Are we going to break up towards that 121 level? We might, but it'll be a big sell up there in our view. We'll hammer it. Okay, in terms of, if you're nervous about trading the USD long, a lot of traders are a bit bearish about the USD. We're not, obviously, but JPY, great alternative, because JPY is oversold everywhere in our view. And if we do get real risk off, it is the yen that is going to be the main beneficiary of strength and the US dollar behind it in our view. Now we've got a position at 119.80. Nothing really doing, just over 100 pips. I've got the stop at 119.50, pretty tight. Okay, if we were to break up and our stop gets taken, we'd key off the 121 level for weakness, or look for the euro to top out the 120 level, sell it, stick a stop back behind 121. Okay, which is a big resistance zone now in our view. What about if we break down? I think we'll go and hit the chart low there. Actually, notice I made a mistake, but target's 117. It's of course 116. Okay, I think we do break down and just smash through this level, then 110, then 100 on the downside. So a lot of downside potential, a limited upside. So you can sell the euro if it rallies up, just look for topping action, or sell it on a break lower, keeping it pretty simple. We'll see what happens with this one. What about Euro GBP? A kind of similar scenario in our view. Limited upside, I keep saying it, sorry, limited upside and not downside. Obviously had that big surge up there, come down, snap the 20, traveling kind of sideways. If you want to sell it, just sell any weakness, stop back behind there. We rally up towards this level, topping action, stop behind the 2-day move-in average. This one's doing actually pretty well for us, as you can see, from 91.20 in, we're at 87.77. Our own view is, okay, the UK's got problems, but Eurozone's problems are just so much bigger. So I like the look of this one as well. I think the three pairs, the one I think, well, I'm sure regular viewers, I really like it, and readers of the member centre, I just like Euro JPY. I like them all, but Euro JPY, for me, gut feel is one I think could move the most. Now let's have a look at a couple of Euro correlated currencies. Like I said, we're going to look at USD Czech krona and USD PLN. So this frequently, if you're a Euro bear, it's the proxy currencies that tend to go down quicker, and they have gone down quicker than the euro on the USD, but recently they've mounted a little bit of a rally. I view that rally as a selling opportunity. So let's go and take a look at them. All right, on the USD Czech krona, our first chart. In terms of this chart and the USD PLN, similar kind of chart formations. We have a kind of similar view of what's going to happen to both the krona and the PLN against the USD. We can't decide which pair will perform the best if our view is correct. So we're doing both, splitting our risks between the two. Now, even before we had the coronavirus come into play, we were saying, historically, the krona and the zloty severely overvalued against the USD. Now, the USD had a great bounce there, okay? And obviously, we've come back to test support, bounce, now trading above support. Now, even if we don't see big weakness in the euro, I don't see much strength in the zloty, the Czech krona and the zloty, just simply because they're very exposed to what's going on in the global economy. They're emerging market currencies. They're the ones that are going to get really hit by what's going on. So yeah, I think the USD is going up anyway. The euro going down hard would just really help the USD get up harder. So just trading above support here. Go back through the 20-day move-in average. We've broken it. We haven't got really very far away from it. We're bullish, so we'll just come back through it. Chart highs, and then we've got to pick a target, because once we're here at multi-year highs. Now, just doing kind of my own calculation in terms of historical valuation, I think we could get to 30. Okay, so basically up here somewhere, you've got about 5 to 1. Okay, in terms of a risk to reward. Now the USD, that's about 15% surge. You can easily do that again, in our view, the way things are going. I think it's a really nice looking trade. Come through, just manage the trade, obviously, but I think longer term, going a long way higher. And obviously, I've got a similar view of the USD against the Polish zloty. You can see the chart's pretty similar. USD big surge up, back to test support, up, and then we're kind of a good way away from this level here. We're just kind of trading very tight volatility, low volatility. That will be points to a big move. We think it's going to be to the upside. So basically, just looking for any strength and breakout from the triangle. New chart highs on this one. A level I picked out is 480. So similar kind of risk to reward. Now, I know a lot of people find it hard to, let's say, buy currencies when they've got no upside target, but you can do a kind of model yourself, which we've done. I think USD going a long way up on these proxies, and there's other proxies you can look at as well, but these two I particularly like. So yeah, euro's not looking good. We'll obviously see what happens in the new week. I'm sure it's going to be another volatile one. We will see what happens, but that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.